welcome to this new course, that is Option Strategies Made Easy. Strategies for both option buyers and option sellers. This is my new course on options. Many people ask me why I named this course as a Option Strategies Made Easy. I could have just kept name as a course on option trading or something like that. The reason is, when I started trading initially, I used to trade only in stocks or used to trade in only futures. And the reason is, I did not have knowledge on options. I used to buy calls and puts sometime, but not more than that. I never used to sell options, never used to do hedging, nothing. Only I used to trade in call or put option, pure buying, or in futures, or in stocks, in cash. What is the reason for not trading in option? There were two reasons for not trading in option. And one reason was, I was not understanding what is options actually. Options as such, as I understand, it's a complicated subject. It's not as easy like selling futures or buying futures, or like buying or selling in the equities in cash. Options are difficult than trading in futures and cash, because option is a big science. Option itself is a big subject. It's not so easy to understand in one go, right? It will come with little bit of hard work, little bit of effort, little bit of understanding all the terminologies, but it will take time. One should have that much of patience to learn everything. Once you learn everything, then you will realize that option is one of the most easiest thing to understand. But the problem is, most of the courses, most of the videos on YouTube, most of the books which you start reading with so many mathematical things, you will get confused. In middle of the course only, you just give up learning options. That is what I said. Option is initially one of the difficult subject to understand. And also courses, videos, books are like that. That will make you more confused and more difficult to understand. So that's why whenever I try to understand options, I gave up in between, because I thought it's very difficult to understand. And the second reason is, always I used to hear that option buying is for people who are having the small trading capital, but option buying, most of the people lose money. Option selling is good. Most of the people make money in option selling, option writers, but option selling have unlimited risk, unlimited loss. So that was enough to scare me. So whenever I used to hear that unlimited risk, unlimited loss, I used to get scared and I never tried to do option selling. And one day I took a courage and decided I will do option selling, and I did it, and I made money on first time whenever I did option selling. And I understood that option selling doesn't have unlimited risk or unlimited loss if you keep the stop loss. Yes, just like any other trading, option selling also you can keep the stop loss. If you keep the stop loss, there is no unlimited risk. If you hedge your position, there is no unlimited loss. So you don't have to scare about options are unlimited risk, unlimited loss. Only if you do naked option selling. If you don't have any stop loss, yes, then it can be unlimited. So this was the second reason. I used to get scared that options have unlimited risk, but nothing like that. You can hedge your position or you can even keep stop. So what is the reason I named my trading course, option trading course, as Option Strategies Made Easy? Because I'm sure that most of you, just like me, finding very difficult in understanding the options terminologies, option strategies, option hedging, understanding terminologies like option Greek, delta, gamma, theta, and all this. And you must have many times tried to understand options and you must have given up in between. So you have reached the right place, because main objective of this course is to make you option learning much easier. After this option course, hopefully you should know that option is not very difficult. So I'm not using too many mathematical things. I'm making this course as one of the easiest course to understand and learn option strategies. So that's why this course is named as Option Strategies Made Easy. So let's go to the next slide and let us see the contents, because you need to know what is covered in this option courses, right? So let me discuss about the contents in this course. First, we are going to cover with the options overview. I'm sure few of you must be at least having the basic knowledge of options. You know what is call option, what is put option. Here, maybe there are people who are very new to option, who don't know even about what is call, what is put. They must have only heard of it, or they must have read it somewhere, but they're not very clear. So for their understanding, I'm going to cover a small subject on options overview. I'm going to discuss about power of options in trading, so that at least new traders, new to options, they will at least get the knowledge about the basics. I'm not going to spend too much time here that people who already know about the calls and put option, they will get bored that why I'm wasting their time to discuss basics like calls and puts. So believe me, I'm not going to take too much time. I'm going to take a very small time to just brief you about calls and put options, just to brief you about what is the options in trading, why options should be used, how it is better than trading in futures or trading in equities in cash, how options can be better than trading in futures and equities. So I'm going to discuss on power of options in trading. And next is call and put options. So many people may be aware of call and put options. So that's why I'm not going to discuss much in detail. Neither I'm going to skip this because options strategies are made up of only two instruments, that is calls and put options. Call option and put option. So at least you need to know the basics. Without knowing the call and put option, you'll not understand anything, right? So I'm going to discuss in brief about call and put options. Next comes intrinsic and extrinsic value. Few of you must have even heard of intrinsic and extrinsic value, but you must not be knowing what is this. So here I'm going to discuss what is intrinsic and what is extrinsic value. You know that if you want to buy a call options, Nifty, Bank Nifty or anything or any stocks, you know that there is a premium is involved, right? For example, if you want to buy a Nifty call option 15,000, it has a different premium. If you want to buy 15,200 call option, it has a different premium. 15,500 have different premium. Same week options have different premium. Next week options have different premium. Monthly options have different premium price. So every options have so many different prices. So you will be having a question mark how these option prices are calculated. But what basis they will calculate the option premium price. You need to know that, right? Randomly you can't go and buy any call or put option. You need to know how option prices are determined. So that all calculated by something called intrinsic and extrinsic value. So that is what I'm going to discuss here. What is intrinsic value? What is extrinsic value? Very important for an option. Next comes the most important thing in trading called option Greeks. I myself struggled a lot to understand option Greeks in the initial days because most of the places when you try to understand option Greeks, they will make it very complicated to understand anything. So in my course, I made it very simple to understand option Greeks. By end of this course, hopefully you should be clear with what is option Greeks, like what is option delta, what is gamma, what is vega, what is theta, everything. I am trying to make it very simpler way to become a good option trader. You need to have the knowledge of option Greeks. You need to know what is option Greeks, what is delta, gamma, theta, and vega. Trading in option is not as simple like trading in futures or trading in equities in cash. Trading in options, there are many things to know. And one of the things to know is option Greeks. Whichever option you are buying, you should know what is the delta, what is the vega, what is the theta. Initial days, I used to spend a lot of time in going deep into it. Then I realized that I'm here to make money. I am in trading to make money, not to become a professor in option Greeks. So I don't have to go so deep into it that I want to do a doctorate or I want to do a research or anything. Yes, if any one of you want to go deep into it, if you want to do too much of research in option Greeks, yes, it's a vast subject. You can even write a book on option Greeks and there are so many materials available, online, books, everything, and you can do deep dive into it and you can learn about option Greeks, how option Greeks are calculated. But nowadays, there are so many softwares are available. Everything is available online. You need to know what is option Greeks, what is delta, theta, gamma, vega. That's it. That's what I do it. In this video also, I'm not going to make this course very complicated by using so many slides on option Greeks to making you difficult to understand. I'm going to use it in a very simple way and I'm going to show you in live software about option Greeks, how it changes everything. Okay. Then we are coming to the last lesson of course in the lesson 1, that is how to profit from option in any market condition. So what is the beauty of option is, I will tell you now. Tomorrow market is going like this, right? Nifty, assume that this is Nifty. You can buy call option, you can make profit. You can buy futures, you can make profit. Suppose if it's a stock, Reliance, HDFC or any stocks, same way, right? You can buy call option, make profit. You can buy future, you can make profit. You can directly buy in cash, you can make profit. So that is something everyone knows. If tomorrow Nifty or some stocks going like this, you can buy put option, make profit. You can sell future, you can make profit. If you are trading in some stocks, you can even trade in cash, sell, buy later when it's going down, and you can make. So you know that in futures and in equities in cash and also in options buying, you can make profit like this or you can make profit like this. But one thing you should know that there are third direction in market, which sometimes market stays like this. What is this? Sideways market. That means neither going up or going down. And you should know that 70% of the time they say market stays sideways. Only 30% of the time market goes in a trending mode. That you should know that 70% of the time market stays sideways, range bound. Only 30% of the time market goes in a trend, uptrend or a down. So you know that 30% of the time you can trade in futures or you can trade in equities, cash. You can also trade in options buying. Is it possible that you can trade here in futures or in cash and you can make money? No, you can't trade in equities, cash. You can't make money in futures if market is in sideways. But there is a way you can make money whenever market is trading like this also. That is what 70% of it. And how you can do that? By options. That is the beauty of options. In option trading, when market is in the trend, go up, you make money. If you are right in direction. If market is going down, you can make money. Even if market is staying sideways, you make money. So there are 3 ways to make money in options compared to only 2 ways in futures or in cash segment. So that is the beauty of options. So 70% of the time I said market most of the time stays sideways. Here also you can make money if you have an option trade. So that is what you should know, that you should know how to profit from options in any market conditions. So one thing always remember, what is the beauty of options? Options, you have 3 ways to make money. In futures, you have only 2 ways. Options, up or down, you can make money. Even if it is sideways, you can make futures. If you buy future, it has to go up. If you sell future, it has to go down. If market is staying like this, you can't make. So options is better than trading in futures. And that's what we are going to discuss, how to profit from options in any market condition. And that ends the lesson 1. So total, there are 5 lessons in this course. First lessons will be focusing on basics of options, calls and puts, intrinsic, extrinsic value, option grades, and how to profit in options in any market conditions. Then we are going to the lesson 2, where we are starting with the strategies. So I said options, when market is going up, you can make. So you need strategies that are bullish strategies, right? Bullish mean, you know that bull mean going up. Bullish mean when market is going up, you need strategies. That's what I'm going to discuss. Bullish strategies, we have 4 strategies: long call, sell puts, bull call spread, bull put spread. Now you'll be thinking that why there are so many things, right? Bullish strategy means all these days you were only knowing about long calls. And remember this, you know that most of the traders initially they lose money, right? Even when I was new trader, even I also lost my capital. Couple of times I've blown up my account. And it's common story in stock market trading. Most of the people come to stock market with a zero knowledge. They try to do trading and they end up losing money. And the biggest reason why people lose money because of this long calls. Because every time they think that they have to either long calls or long puts, right? They only know about this strategy. And this is the most dangerous, even though it's one of the simple strategy, long calls or long puts. Many people lose money in trading by doing this. They need to have some other strategies like spread. Okay. What is spread? Actually speaking, if you are new to trading, then you should start with the spread, not about long calls or sell puts, because spread will give you limited risk. You will not at least blow up your account, unlike calls and put options. Like how in calls and put option naked you buy and you lose, end up losing. Spread, remember, risk is limited. Just like keeping stop loss, you have limited risk. So that's why my advice is, if you are new to trading, start with the spread, not directly going long on calls, or selling calls or puts. Okay. So this is important. Spread, many people don't know about that. They think that spread means it's a difficult to understand and it doesn't look fancy for new traders, because here spread loss is limited, but profit also limited. But new traders, they don't like that, right? They always want unlimited profit, but they don't know that losses also can be sometimes unlimited if they don't trade with discipline. So spread will make you disciplined trader. So that is why long calls, I'm sure most of you already know it, but still I will discuss under what all the circumstances only you should buy long calls. Every time don't buy and go and trade in long calls. If you want to do long calls also, there are situations where it can work better than just randomly buying long calls whenever you are bullish. Sometimes you have to do the spread also. So that is what I'm going to discuss. Long calls, when you should do, when you should not. Selling puts. Yes, selling puts can also work most of the time. Compared to long calls, selling puts can work most of the time. And I can say that when I was new to option trading, this was my favorite strategy, selling puts or selling calls, whatever it can be. That means just keeping stop loss and trading with the directional trade. So these are all directional strategies. Okay, long calls, sell puts, spread and all directional only when you are bullish. So selling puts also not bad, but only problem is it requires bigger capital. You need to have a bigger capital. But yes, most of the time it can work if your direction is right. So that I want to discuss when selling puts are better. Next is this bull call spread, bull put spread. So though it sounds like complicated spread and all this, but remember, once you put some little bit effort, little bit practice, you find that it's trading. Option trading is not as difficult as it looks. Option trading is not about just buying calls or puts. There are something called spread. And my strong advice to new trader, start with the spread. Don't directly go for long or sell puts. Focus on having a limited risk and don't go for unlimited risk. Long calls, risk is not unlimited, but the thing is that they don't keep stop loss or they keep averaging it and end up losing big money. Selling puts have a unlimited risk if you don't have stop loss, but this is something which can work most of the time if your direction is right. This have a not only better probability, but also can give you limited risk, limited profit. And the next is lesson 3, that is the bearish strategies. Here we are discussing about all the bearish strategies in options trading. Here we are discussing all major strategies in options for bearish market. First one is long puts. Long puts is a strategy for the bearish market. But when you should do the long puts, when you are very bearish, then only you should do the long puts. After that, this is a naked put strategies where you will just buy puts and you expect market to go down. After that, we are going to discuss strategy, that is the sell call strategy. This is also bearish strategy, even though it mentioned as a calls, but this is also bearish strategies. This is also naked strategy. That means just selling calls when you are expecting market to go down. This is for buyers, option buyers, and this is for option sellers. If you are an option buyer, you will do the long puts. If you are an option seller, you will sell calls. Both are for bearish market only. Then we have bear put spread. Just like bull put spread, this is also spread strategy, but this is a bearish strategy. Bear means it's a bearish mark. Put mean here you will using the put as an instrument. Spreads mean you will be using two different strikes. It's a two-leg strategies. That means you will sell a put and also you will buy a put. That is called two-leg strategies. Like how we said bull call spread, bull put spread. This is also one of the best strategy for new traders. So in this strategy, the advantage is loss is limited and profit also limited. Both are limited here. Unlike long put, sell calls, here loss is capped. Here long puts and sell calls, profit is unlimited. Here in long puts, profit is unlimited. Sell calls, profit is limited, but here profit also limited, losses also limited. Bear call spread also bearish strategy only, but here you will be using calls. Here you will be using puts, here you will be using the call. That is what we are going to discuss in the bearish strategies. There are 4 strategies which we are discussing in bearish strategies. And the lesson 4 and the last lesson is neutral and non-directional strategies. Neutral strategy means Nifty is trading here. You know that Nifty can go either this direction, that direction, but you don't know which direction it will go. If you are a long call buyer, then you can make money only if it goes like this. If you are into long put, you can only make money if market goes like this. But in this neutral strategies, you don't know which side goes. Whichever side goes, you make money. It goes up, you make money. If it comes down, you make money. That is called neutral. What is the non-directional strategies? Non-directional strategy means you are expecting market to stay sideways. You don't expect market to go to any direction. And non-directional is most popular in option strategies. The reason is 70% of the time market stays sideways. They say 70% of the time market stays sideways. So this is what most popular in option strategies, because most of the time market stays sideways. And only 30% of the time market goes in trend. So 30% of the time we have bearish strategies and bullish strategies. But for 70% of the time, we have these non-directional strategies. Here, I'll show you what is short strangle. One of my favorite strategy, when I was 9 to 6 job, this was one of my favorite strategy, short strangle. That means here, you will collect the premium. You are a seller here. And this is the strategy can work most of the time. Though losses are unlimited here if you don't keep stop loss, but this is the probability of success is very high here. Then there is a short straddle. Short straddle is similar to short strangle, but this is an aggressive way of selling option. Short straddle is aggressive method of selling the option. So that also we'll discuss short straddle. Long strangle is a neutral strategy. That means long strangle and long straddle both are neutral strategy. That means if market is trading here, you know that there will be a big movement either in upside or downside. You don't know. Maybe quarterly results are coming in some stocks and you know that results will be either very good or result will be very bad. So if result is very good, there can be a big move. Result is very bad, then there can be a big down move. So this long strangle and long straddle for that kind of strategy. Breakout strategies. Or sometimes during the election result, you know that if election results are favorable to market, there can be a big move upside or there can be a big move on the downside if news is bad. So such time, this will be very useful. And then next is iron condor. Iron condor is the strategy which you can use it whenever there is a sideways movement, just like a strangle I said or straddle sideways movement. But iron condor, here you will use protections. That means other than selling, you will buy also. So it's a 4-leg strategy. Iron condor is a 4-leg strategy. And then iron butterfly, this is also 4-leg strategy. Iron butterfly similar to iron condor. When you are expecting market to stay sideways, you can go for this. So all the strategies we are going to see in much detail, everything, probability of success, how much maximum profit you can earn, how much maximum loss you can incur. All this I'll show you. So total, these are the 14 strategies which I'm going to discuss in this course on option strategies made easy.